looking at that. Thank you, Jennifer. Okay, so to get started, we want to talk about what are the questions that every business owner is asking or should be asking. All of these questions can be answered by looking at reports and rely on good bookkeeping practices. So every business owner says, how much money did I make? The next question is they ask, where is it? Because it doesn't seem to be in my bank account. They want to know how much are they going to owe in taxes? And then how much do I have to sell to cover my salary and all my overhead? And are my individual jobs or separate lines of business profitable or not? Should I stop doing one type of service and start doing more of another? And all of those answers can be found if you have proper setup and you have good bookkeeping. So today we're focused on QuickBooks. About 96% of the population out in the world is using QuickBooks to manage their accounting. And in your industry, you have unique softwares. A lot of you are in the HVAC, plumbing, electrical, construction space, and you have very unique processes and technologies that you're using. You might be using ServiceTitan or Field Edge or Smart Service or one of those dispatching softwares. Or if you're in construction, you're using CoConstruct or some sort of custom estimating software. And you have to pull all that together and incorporate that into your bookkeeping processes. So it is a delicate balance between front-end softwares and QuickBooks and what, how you need to establish your workflows. And it's a challenge. So why is bookkeeping so important? Well, it's required to provide financial information to outside advisors and coaches. So if you're a member of Service Nation Alliance or Service Roundtable, they have a lot of coaching resources available to you. And they're all going to ask for financials. And so if you don't have good bookkeeping, that information is not going to be very useful to them to provide good coaching advice. And you're protecting your investment. Every day, I look at my financials every single day. And it's important to me because I've invested a lot of money in this business and I have a lot at stake. I have 65 employees that are depending on me making a profit so that I can cover their payroll. It also, when you get ready to sell your business or open another business or get a loan, they're going to be looking at your financials. And so you really want them to be clean and tidy and have good bookkeeping, or you're not going to be able to do those things easily. And of course, the necessary evil of providing the IRS tech and state governments your tax returns. So that all relies on your bookkeeping. So what are some of the best practices? You want to make sure you're using an appropriate chart of accounts for your industry. So when you load QuickBooks up, it's going to default to some random chart of accounts. And that is not going to be good enough for you. You need to really go through that list, those of categories, and make them very useful to you and what the things that you're trying to hone in on. And there is a standard list. Service Roundtable, Service Nation has great informational resources for you on what your chart of accounts should look like. So make sure that you tap into those resources. You want to make sure that you're recording sales and cash receipts every single day. So if you're using a front-end dispatching system, you want to make sure that that system is syncing into your QuickBooks every single day. And you're not just relying on bank feeds to tell you how much money you have and how much money has come in for the month. Bank feeds are only going to tell you what hits the bank as deposits. They're not going to tell you what your open receivables are, and they're going to skew your financial picture. If that is the way you're recording revenue, you are missing out on a lot. And I know with QuickBooks Online, bank feeds is the first thing you do when you turn on QuickBooks Online is you connect your bank accounts and they try to start pulling in these bank feeds. And it can cause way more confusion and many times than it's helpful. So There is a time and place for bank feeds, but it's not an end all be all to your bookkeeping and accounting. You need to record the actual sales, whether they're paid or not, that are happening in your business. Make sure you reconcile your bank account. Managing bank feeds is not a bank reconciliation. Okay, bank feeds, and I keep going back to this because this has been such an area since QuickBooks Online came out and they put bank feeds out there. It has caused so much grief. Oops, got a reminder that's dinging on me. It's caused so much grief in the accounting space because people are doubling up. They're recording things in QuickBooks and then they're sucking in bank feeds and recording deposits, and sales are getting doubled. And if you're not doing bank reconciliations every month, you won't catch that. So bank feeds does not replace reconciling your bank account. It is most everything in your business flows through your checking account. It is the single most important thing to reconcile, that and your credit cards, because most people use credit cards for a lot of their purchases. So make sure that you are reconciling those accounts every single month. And your loans. So if you have bank loans or car loans, truck loans, notes with your bank, make sure those all get reconciled every single month. There's a beginning and ending balance and transactions that have cleared. Make sure you're going through that process. Watch your AR closely. Run an open invoices report every single day and make sure you're collecting on the stuff that's aging, because the farther out it gets in aging, the less likely you're going to collect on it. Pay your bills on time. If you are having a hard time paying your bills, cash flow is an issue. So you need to know what your bills are. You need to be using accounts payable and accounts payable reports in QuickBooks and managing that every single day. Don't mingle personal and business funds. Do not set up your personal checking accounts inside QuickBooks or your personal credit cards inside QuickBooks. That is a no-no. Keep that separate, okay? If you need to loan money in or take money out, do that, but manage your personal stuff outside of your accounting, okay? Don't mix the two. It's gonna, if you show, I get it that you want write-offs and you want to reduce your tax exposure, but when you go to sell and you've got all that personal stuff mixed up in there, it's not going to look good. And the goal of owning a business is to someday be able to sell, right? And show profitability. So don't let the tax situation take over really giving you a clear picture of how the business is doing. And close your books. This is a big mistake I see everybody do, which distorts all the reporting. You must close your books at a minimum once a year, okay? It takes 2 seconds to do in QuickBooks, and you need to do it in a timely fashion. You need to do it the minute you turn over your stuff to the accountant to do the tax return. That's when you close your books. They are going to give you adjusting entries, but to prevent yourself from accidentally changing numbers, you need to close the books and lock it down so nobody's changing things while the accountant's trying to prepare the taxes. Really important. Okay, so the starting point for reporting is your chart of accounts. This is your list of all the categories you intend to use to track all your business transactions. When you look at the list in QuickBooks, it's organized by type. So you'll see all your balance sheet accounts at the top of the list, and then it'll move into your income and expense accounts. It's going to vary. Even everybody on this call, even if you're all in HVAC, that chart of accounts is still going to vary. Your balance sheets are all going to balance sheet. So your assets, your liability, your equity accounts, those are going to be unique for every single person on this call. All right. Because your business, your loans are different. Your credit cards are different. You all have different checking accounts. You have balance sheets are going to be very unique. The income and expense accounts and cost of goods sold, that part of your list could be very similar. If you're using the recommended list from Service Nation Alliance, they could, and when like in a franchise space, if you were opening up a Subway, they'd give you the chart of accounts and they'd say, you're a new franchisee, use this chart of accounts. This is what we've defined as the most appropriate for your industry. So the P&L accounts, the profit and loss accounts, the income and expenses and cost of goods sold, take advantage of what they recommend, because they've spent a lot of time putting that together that should be useful to you. And they define what your financial statements look like. So if your chart of accounts is a mess, your financial statements will be a mess. So the cleaner, more organized you get that, the better your financials will look. So this is just a quick screenshot of part of the list from Service Nation Alliance. On the income side, obviously it's a much longer list, but you know, you want to make sure you've got a really good cost of goods sold section. And we're going to talk about this a little bit as we go throughout the class. Okay, so at month end, what are the reports you should be looking at? Every month end, you should be looking at your accounts receivable. Is there stuff on there that needs to get written off? Accounts payable, do you have some old bills hanging out there that need to get paid? Did you do your bank reconciliation? And you actually need to look at that report. And I'm going to show you in the next screens what you should be looking at. If you're carrying inventory, you need to look at those balances and make sure that they make sense. The general ledger isn't really something you would look at other than maybe just to review that people posted whoever did the posting, put things in the right categories. So if you're looking at your general ledger, that's a report of every transaction, the debit and credit that has gone in your accounting system for the whole month. And it's a good way to do a quick review and say, did somebody put office supplies in the telephone expense category? Do I need to move that? Do I need to reclassify that? And then of course your financial statements, that would be your profit and loss and your balance sheet. At a minimum, these would be the things you'd want to look at, but there's a lot more. So these are your financial reports. The more is the operational reports. So let's just run through some of the financial oriented reports. So when you're looking at your open invoice, this is my favorite report on the customer side. What you're looking for are these negative numbers. Why do I have a payment that's not applied to any invoices? Was that just a boo-boo on the person that's doing the data entry, or is it legitimately like a prepayment on something? So this report needs to stay clean. Also, you're looking at stuff. I've got something aging that's 350 days old. Do you think at this point, unless you take them to court, you're ever going to get paid on it? Probably not. So, you know, you want to look at that aging column and make sure stuff isn't hanging out there. This is also going to tell you if you're having problems with your front end system feeding in properly. If this has all kinds of crazy numbers and unapplied amounts, that is going to require cleanup, and you have to clean it up one customer at a time. This needs to be a clean report. Same thing on accounts payable. This is my favorite report in accounts payable. And these are similar in both online and desktop versions of QuickBooks, same reports. This will again show you anything that's hanging out there, a payment that's not applied to a bill. You don't want somebody to go ahead and pay that $12,000 bill if you've already made a partial payment or you have a credit that you could take. So make sure you're reviewing that. Also, again, aging. If something's really old, is this just something that got entered twice? Or maybe somebody put it in as a check and they didn't pay the bill that was out there? That's something that needs to be investigated. Does it need to be deleted? Does it need to be voided? If it's a prior year, you don't want to delete it. You got to put in a reversing entry. So, you know, the way of cleanup, you might need help on that part, but just knowing that you have an issue, these are the reports that are going to tell you what is an issue in accounts payable and accounts receivable. So I mentioned the bank reconciliation and how important it is. So when you go into QuickBooks and you reconcile, there's a beginning balance per the bank statement. and there's an ending balance per the bank statement. And what you're trying to do is not just get it to balance and get that difference to zero. This is the mistake I see a lot of bookkeepers make. They're so excited that they got the bank to balance and they click done. But what you really need to do is look at the uncleared items. That's the whole purpose of a bank reconciliation, not to just get the difference to zero, but to identify the things that haven't cleared. That is really why you're doing it. So is it reasonable? Are the things that are listed as uncleared reasonable? Do I have a deposit that's uncleared from 3 months ago? Well, that would be a problem. That means in QuickBooks, you think you have that cash, but the bank never got it. Where did that money go? Is it driving around in somebody's purse because they forgot to take it to the bank? Believe it or not, I've had that happen. Okay. So, you can't just let this sit there and ride out forever. This is the reason that you're doing a bank rec, is to look at the stuff that is uncleared, analyze it every single month and make sure that it's reasonable. It's okay to have uncleared stuff. Maybe somebody didn't get their check, it got lost in the mail, or, it's sitting on your desk because you didn't want to mail it because you didn't have the cash to cover it. As long as you understand the stuff that's uncleared, that's okay. But it is a place to look for things that are problems. This is the closing date that I mentioned. In order to keep your financials and your reports tied out to the accountant, you have to put in this closing date. This is available in both desktop and online. So make sure you make use of that. It's under accounting preferences. You click this set date password, and then you just keep updating this every year and lock it down. Put a password and don't give everybody that password. That's your only tool in both versions of the software to close the books. Okay. It's not a permanent closure. You can override it anytime you need to, but you will do it consciously because it's forcing you to put in a password. Okay, so what's the difference between bookkeeping and accounting? People use them interchangeably and they're really not the same at all. Bookkeeping is the practice of recording the individual transactions. So you're chasing around as the bookkeeper, putting in everything that's happening, everything that's going through on the credit card, everything that's going through in the checking account. It's a mad dash to keep up with everything that's happening. Okay, so that's what bookkeeping is, recording all of the transactions. Accounting is the analysis of what has been put into the system. So we're focusing today more on the analysis, but the analysis is not able to be done unless the bookkeeping is done and it's done correctly. So bookkeeping is really the foundation of everything. So if someone says your bookkeeping is a mess, that's a problem. And you're never going to be able to do the analysis until that is fixed. Okay, so there's two financial statements that really give you the overall financial condition of the business. There's the income statement, which everybody's very familiar with. That's income and expenses. And then the balance sheet. So the balance sheet is your assets and liabilities and the equity in the company. And that balance sheet, it's actually the most important financial statement. It's the least understood, but it's the most important. The income statement is a temporary situation. You can have a good year this year, and then next year you might have a bad year, and then the next year after that you might have a really good year. You kind of get to wipe the slate clean and start over every year. So it's what's called a temporary financial statement. The balance sheet is a permanent financial statement. It follows you every year. You cannot escape it. So if it's a mess, it's a permanent mess. So that's the first thing I do when I work with somebody in cleaning up QuickBooks and getting the reporting set up correctly, is I tie out that balance sheet to the last tax return, because I'm making the assumption that the CPA did a really nice job. They did whatever cleanup they needed to do on their end to present a tax return that they could hang their hat on. And those numbers are probably correct. So when someone says my books are a mess, the first thing I'm going to do is say, let's clean up your balance sheet. This is going to follow you. I can forget, this might be wrong 10 years back. I don't really care right now. I got to move forward. And so give me the last tax return. Let's tie out to these numbers, lock them down so nobody changes them, make sure they're good, and then we'll move forward. Then I can have confidence that the income statement the next year is correct. But if my balance sheet isn't correct, chances are your income statement isn't correct either. So when I do cleanup, I'm very focused on the balance sheet. And now a lot of people don't understand what that is, but you just got to trust me. It is the most important financial. Okay, so there's a couple methods for reporting. There's cash and accrual. So what is the difference? Cash, when you run a report on cash basis, that means QuickBooks is going to ignore everything that's open in accounts receivable and everything that's open in accounts payable. It's like they don't exist. So if you haven't paid that bill, even though you entered it as a vendor bill, QuickBooks ignores it when you run a financial. If you have an open invoice to a customer, you did the work, you earned it, but you didn't receive the money yet, QuickBooks ignores it. So it's only counting revenue and expenses where money has physically changed hands. That's cash basis. Accrual means I'm going to recognize all revenue, whether it's open in accounts receivable or not. If I created an invoice for it, I get to count that as revenue because I did the work. I've earned it. It is due to me, and I'm making it a leap of faith that I am going to get paid on it. Same thing with payables. Every bill that gets put into accounts payable, whether you've paid it or not, is going to be reflected in your financials. So accrual is really the way you want to analyze your business. So I would recommend everybody on this call, whether or not you track your taxes on cash or accrual base, that's just a tax return, a selection for tax return purposes. And there are many businesses that choose the cash version of recognizing revenue and expenses for tax purposes because that's advantageous to them, right? They might have a lot of receivables, but very little payables. In that instance, cash basis from a tax perspective is very advantageous. But to analyze your business on cash basis, you could be in a world of pain and you wouldn't even know it. So I would recommend everybody on this call, set your default reporting to accrual basis. When you file taxes or you're doing tax planning, you can easily flip it on the fly to say, now show it to me on cash. I look at it all year on accrual because that's what I need to run my business. But at year end, I got to flip it to cash. So that's pretty cool that QuickBooks lets you do that. So on demand, you can flip any financial report to cash or accrual as needed, but set your default to accrual because that's how you need to analyze your business. You need to use accounts receivable. You need to use accounts payable. You need to be using those features so you can see your true picture of where you are. Okay, so the income statement. If you're looking at your income statement, I would strongly recommend that you always add this percent of income column. So if you click customize, you'll see it's a little option right on the screen, a little checkbox that you can do percent of income. The reason you do that is it's going to give you some really good percentages, which we're going to talk about in more detail. But those percentages are really important in helping you analyze how you're doing in the company. The balance sheet, this is the other main financial report. For those of you that don't really understand what it is, it's the sum of all of your assets. So your vehicles, your buildings, your cash, your accounts receivable, your inventory, your work in process. It's all your intangibles, copyrights, trademarks, customer lists that you bought if you bought another entity. It's all those assets that you own Then you subtract all the liabilities that you have, your payroll tax, unpaid payroll taxes, your loans with banks, your loans with officers, your credit card balances, your accounts payable. So all lines of credit, all the things that you owe out to other people. The difference between those two numbers is the equity you have in your business. If your equity is negative, that's a really bad. Now, it's kind of hard to see that from the presentation you see on the screen. So when I explain to you this first equation, assets minus liabilities equals equity, that makes sense. People understand that. They're like, oh yeah, everything I own less everything I owe out to others is my equity position in the company. That makes sense. For whatever reason, I didn't design accounting theory. Happened way back in the day in Picasso's time. They restated the balance sheet. So they essentially added, if you're an algebra person, they added liabilities to both sides of the equation, and they moved liabilities over here with equity. So that's the second equation you see on the screen. They just changed the first presentation and they do it this way. So now you've got assets at the top, and then down below, you've got your liabilities and equity. So it's just the way they present it on financial statements. I don't know why they don't present it the first way, because that would make my life much easier in explaining what a balance sheet is, but they don't. So when you give it to a bank or an outside entity, this is the way they present it. And so when you look at it, you're looking at, do my total assets equal my total liabilities and equity added together? Oops, didn't mean to click forward. And they should. QuickBooks will always keep them in balance. Unless you have some sort of little corruption issue, you might get a pop-up when you run this report that says it's out of balance. That's what it's telling you, that something's missing a linkage and you might need to run some utilities, because these two numbers on the report should always match. And then you can add comparatives. You know, what were my assets last year versus this year? Are my assets growing or declining? Are my liabilities growing or declining? So in looking at this one, going from 21 to 22, my assets have increased. So that's good, right? I've got more money in the bank, more whatever, more fixed assets. And my liabilities have decreased. So that's even better, because I've got more assets and less obligations to others. So my equity position should have gone up, which it did. It went from 207 to 337. And that's good. You want to see your equity position continuing to go up and up and up. All right, so those are the financial tools. Now we'll talk about what are operational reporting. So operational reporting is when you really dive deep into the information that's hiding underneath the financials. So it's a deeper layer inside of your business that maybe will take your profit and loss and expand it out into more information for you. So what are these kinds of reports? Job cost reporting is an example of operational reporting. If you track profit centers by, say, location, maybe you have 2 locations and you want to see how well is this location doing versus that location. Or maybe you do installs and you do repairs and you want to see how am I doing on my install side of the company versus my break fix type side of the company. Or you might be looking at groups of customers. How am I doing in the residential space versus the commercial space? It's all still part of my income statement when I look at it as a whole, but I might want to see them side by side. So I could say, well, you know, it doesn't really make sense for me to play in the commercial space. I'm not making very much money over here, but I'm making a ton over here. So maybe I should focus my effort over here and stop doing this over here. So that's the point of the operational reporting, is to take you deeper and understand what's happening. Trending, budget versus actual, dashboards, those are all other operational reporting tools that are in QuickBooks and outside of QuickBooks. So I'm just going to run through a couple examples of operational reports. This is one of the job cost reports that's available in QuickBooks, where it's showing you, hey, I estimated this project was going to cost $56,000. So far, I've already incurred $31,000 on those projects. What's my difference? So it's deep diving into individual projects to see how I'm doing. We're going to talk a lot more about this later, but this is an example of a job cost report. This would be an example of a profit, tracking things by profit centers or locations. So if you're using desktop, you would use classes. That's a feature in desktop that you can turn on, and then you can, every time you enter a sales or a purchase transaction, you can say, what department does this belong in addition to my general ledger account? Yeah, it's a direct labor expense, but is it for my install department or is it for my service department? So you can differentiate and get that deep dive into the business. It also gives you the opportunity to see a gross profit, which this is really the icing on the cake, right? Knowing that you have, whatever percentage gross profit is important, but which line of business is driving the percent up or down? So you might be really profitable in the installation side of your business, but your pricing is not right on the maintenance side. And so it's driving your gross profit down because that gross profit for that division is much lower. So this is critical in your space. Another way to look at things, as I mentioned, maybe taking collections of your customers. So if you went through your customer list and you said, this customer is a commercial customer and that customer is a residential, and you identified that in QuickBooks, it's called a customer type. It is available online, but there aren't a lot of great reports for it in QuickBooks Online. In desktop, you can use the customer type option and specify all your customers as either residential or commercial or new construction or however you want to look at them. And then you can get a great report like this. And I'll show you how later on in the session. You can do trend analysis. So on your financials, you can add that percent of income column, or you can say, show me this quarter versus last quarter, or this year versus last year. And so those trends, this is called horizontal analysis, is really important because it's telling you whether you're going up or down in your performance. You can also do vertical analysis, which is looking at, again, adding this percent of income and looking at how much am I spending on advertising as a percent of my total sales. So this is how much you have to work with that you get to spend and hopefully have a profit at the end. But if one of these elements is consuming too much of this number, then you're not going to have enough left over for profit. So we're going to talk about break even a little bit later. And I will take a pause and take questions. I'm just trying to get through a section. I got a lot of sections. I just have a couple more slides. So QuickBooks, both desktop and online, have budget reporting. So you can enter a budget and then track how am I doing against the budget. So if you set annual budgets, I would highly recommend that you track how you're doing, because it will tell you right away if something's way over, or under, you may have a problem there. So it's going to tell you, are you under or overperforming versus what you forecasted for the year? And then this is just a screenshot of a dashboard from QBO. There's lots of third-party tools that can hook into QuickBooks to provide dashboards on different things. And Service Nation Alliance has a dashboard that you can utilize that's really helpful. Okay, so before I move on to this next section, Jennifer, are you seeing any chats in the question area or?
Yeah, we just had one question when you were talking about the tracking the profit centers on that slide. And if classes are available in QBO or just desktop, or if there's some features that are unique to one or the other, or is that something you're going to dive into?
No, this is a great time to ask that. So when we talked about profit centers, that the use of QuickBooks classes is available in both desktop and online. Okay, so you can turn that and it works pretty much identical in both platforms. The one thing that online has that desktop does not have, which I don't say that very often, but I will say it here, is QuickBooks Online offers another option called location. So you can have both classes and locations on in QuickBooks Online simultaneously. So if you had two different locations and you also wanted to track maintenance, repair, install in both locations and be able to filter and separate location one versus location two, you can do that in QuickBooks Online. You can do it in desktop as well. It just, you'd have to use classes and subclasses. So you would say location one, maintenance, repair, whatever, and location two, maintenance, repair, install. So you can achieve the same, you do it a little differently in the two softwares. So hopefully that answers that question.
Great, that was the only question. Just a reminder, if you have any questions for Lisa as we go through, you can post those. But there's a follow-up to that. Can you do subclasses in QBO, or would you?
Yes, you can. Yes, you can. Yep.
Perfect. Thanks so much.
And, you know, we're going to stop again. So if you have more questions, feel free to throw them out there, even if you forgot it and it's something we already covered, no problem. All right. So QuickBooks Online reporting. There are basically 3 versions of the software. This is just a quick recap. And this changes every day because they're constantly putting new stuff in. So the minute I put this up here, it'll be wrong because they change the software every day. But there's over 40 reports available in Essentials, everything related to accounts receivable, accounts payable, your products and services, and company snapshot, plus adds the classes and the locations. So that's what we were just talking about. So if that's a feature that you want to use, you'd have to upgrade to the Plus subscription if you are not able to activate that. Advanced is a relatively new version of QuickBooks Online. It's got all the same things that Plus has, but it has some additional reporting, advanced reporting options and filters. It also has this reporting tool called Fathom, which is actually an add-on piece of software that they include with that version of QBO. It's pretty expensive. The advanced version, I think, is $180 a month, if I remember right. They just went through a price change, so I might not be exactly perfect, but we can get all of these versions at a discount for you. In your space, I will tell you more of the folks we work with are on the desktop platform. I know products like Service Titan will tell you their software works much better with the desktop version. A lot of you are working in bigger companies that have very large lists, large volume of transactions. QuickBooks Desktop today does a better job of managing the volume that your industries tend to. I don't put big businesses on QuickBooks Online typically. It has not had the functionality and the reporting options that desktop has had. This will, you know, right now, in my opinion, Enterprise, QuickBooks Enterprise, which we're going to talk about in a second, which is the Mac Daddy of softwares in the QuickBooks world. It's for the, you know, big companies. The reporting in Enterprise versus QuickBooks Online is like this. It's Enterprise is way up here, Online is down here. As time goes on, you will eventually see this probably go like that. Okay, but they're not there yet. It could be 5 years. It could be, I don't know. I don't have a crystal ball. But today, if you're asking me which piece of software is going to give you better reporting, hands down, I'm going to tell you enterprise or desktop. So it just depends what you're trying to accomplish. If you're in the construction space or contractor space, absolutely, without a doubt, I would be on the desktop version of the software. So desktop reporting, all of the desktop editions, did I skip over something? No, I didn't. Okay, sorry. All of the desktop editions have the financials and sales tax reporting. They all have company snapshots and memorized reports and report groups and integration with Excel. They all have that. But when you get into the Premier edition of the desktop world, you get industry specific. So if you're in construction or contractor, you're going to get a special flavor that you can install that so that that user interface is more geared toward you. You're going to get special reports. You're going to get special data entry fields that's unique to your space. And then enterprise has advanced inventory. So if you're trying to track inventory in multiple warehouses, or you want some more advanced job cost reporting, that's going to be available only in enterprise. Enterprise, you also can install in the industry flavors. So you don't lose anything by going to enterprise. You still have the option to install it in different industries. But you get these other additional features. You get more users. You can consolidate reporting from multiple companies. If you happen to be set up with separate tax IDs and have multiple QuickBooks files going, you can consolidate it into one presentation for your financials. You can also create some custom reporting using the QODBC. That gets really technical, above my pay grade. I don't know how to do that, but there are people in our space that can do that. And there's also a tool called QuickBooks Advanced Reporting. I will be honest with you, I'm not a big fan of this tool. There are other third-party apps that we use that if you need to mix and match different tables inside of QuickBooks that you can't do natively, this is not the tool I use. Even though it's included with the software, I don't find it a super useful tool. So, but there are lots of third-party tools, reporting engines that you can, one of them is called Finjinny. If you want to write that down, and don't ask me how to spell it. I think it's FINJINNI. That particular reporting tool, we've heard really good things about that one. Might be one you want to check out. But there's lots of them out there. That's the cool thing about QuickBooks. You can find pretty much anything you need through a third-party app if you're trying to close the gap on something you're trying to accomplish. Okay, so now we're going to run through some of the global settings for reporting inside of QuickBooks Online. Under the gear icon in the top right-hand corner, you would go into Account and Settings, and then you would go to Advanced. This is where you turn the class tracking and location tracking on or off in your software. If you don't see this, that means you don't have the right version of QuickBooks Online, and you need to upgrade to the next version, which is the Plus. It's called Plus. Sorry. You start out with Essentials, next one is Plus, and the one on top of that is Advanced. So you need at least Plus to have access to these two options. This is where it says accounting method accrual. This is where you can set your default report basis. So this is what I suggest everybody, click on that little pencil and change it to accrual so that you operate on a daily basis on the right reporting. In QuickBooks Desktop, you would go to Edit Preferences from the menu at the top, choose Preferences, and then you go into Accounting Preferences, and this is where you turn class tracking on. It's on the Company Preferences tab, so there's always in desktop, there's 2 tabs on every preference. Company preferences relate to everybody that's in that file. The My Preferences tab are just your preferences. So each user can define their own things. So you have both options. So related to reporting, you can also in the company preferences, this is where you set the default to cash or accrual, which we just talked about. That's really important. And then if you use the cash flow statement or statement of cash flows, you can classify cash. So this is where you define your chart of accounts and determine whether it's going to fall into operating, investing, or financing activity. Statement of cash flows is a really tough report to understand. I'm not going to spend time on it today because it could be a whole day class. But if you use it, it's basically what it is. It's a reconciliation of your beginning cash to your ending cash for the time frame. So beginning of the month to the end of the month, where did my cash go? Okay, I had a beginning bank balance. I added more revenue, but I didn't collect it all, so that comes off. I had a really big profit, so that gets added in. So it's kind of the pluses and minuses of where your cash went. I had loans that I'd made a bunch of payments on, so my cash went down. I incurred a bunch of payables, but I didn't pay them, so my cash went up. So it's factoring in all the things on your financial statements, both financial statements together, that affect your cash balance. It's kind of hard to understand. It takes a bit, but this is where you classify where you want to see all of your accounts grouped together on the cash flow statement. Okay, so this is the personal preferences related to reporting. If you're constantly getting a pop-up that says, do you want to refresh this report? You can make it so that it just goes ahead and refreshes automatically. You don't have to keep selecting it every time you try to run a report, because that can be very annoying. Or you might have a big QuickBooks file that takes a while to run reports, and you might have reports that you want to be able to customize before it starts trying to run it. You can choose this option to prompt you to modify it before it starts running it. That will allow you to make those changes each time without having to let it run the default way first and then do your modifications. So those are just some personal preferences. You can also set company-wide preferences relating to the format for your reports. So you can put in custom titles and subtitles, and you can do footer lines. You can change the fonts and how you want to display negative numbers. Maybe you want things in red. You can change the size and fonts there. In QBO, you also can search for standard reports and favorites. So in QuickBooks Online, you'll go to the reports section along your left-hand side. You choose reports. It'll have favorites at the top, and then it'll have a whole slew of reports going down the screen, and you have to scroll down to be able to see them all. So if you know the name of the report you're looking for, like unpaid bills, you can just type it in here in the search, and it'll take you right to it. So that's really handy if you know the reports you use all the time. But if you use a report all the time, make it a favorite. All you have to do is click on the little star, and it'll put it up at the top. So it's always there for you to grab all the time. So that's just a easy way to navigate through this report. So the standard reports are going to be on this tab. Anything you set up and memorized are going to be on the custom reports, and then the management reports are going to be things that your accountant would be using. Okay, so in QuickBooks Desktop, there is what's called a report center. So if you're like so confused about what reports are out there and available to you, if you go into the report center, it's going to let you kind of peruse without having to run them all one at a time. You can kind of scroll through different reports based on different categories of things you might be looking for. So these are standard reports. This is your memorized report list, things that you can favorite. What were the recent reports you ran? And then these are contributed reports from other QuickBooks users. So these views over at the top allow you to use this view differently. You can have it like a scrolling window. You can look at it as a list, or you can look at them as tiles. Okay, back to QuickBooks Online. So if you're in a report, you run any report, you'll see this customize button at the top. And when you click on that, you can change how you want to see things. What rows and columns do I want? And what do I want to filter reports? So if I want to deep dive into a particular customer, or a particular product, or simultaneously for two different filters, I can do that. So this is where I'm going to say as of today, there's a lot more customization that you can do on the desktop side than you can do in QuickBooks Online. That's as of today. Again, that's constantly changing. So a year from now, I might have a different perspective, but in today's world, the options you have here aren't quite as robust as they are in the desktop version. Desktop has been around since the early 90s. That's when I started with it, when it was DOS 1.0. So I go way back to when it first came on the market, and that was the desktop version. So that's been around for, well, 92, we're in what year? Almost 2022. So that's 30 years, right? The desktop's been around. The online version's only been out there a fraction of that time. So it's going to take them a while to catch up. Eventually they'll catch up, and then they'll probably surpass, but they're not there yet. Okay, so let's say you get this perfect report laid out exactly the way you want it. You want to save the customization. So that's that button in the top right-hand corner. And then it'll show up in this report grouping called custom reports. You can even create groups. You can do that in both desktop and online. So you can say, I'm going to create a report group called Lisa's reports. And I'm going to put all the reports that I like to run every day and put them in that little group. You can organize them however you want to organize them. And that's what is showing in the custom reports section. And you can put, we're going to talk about this, how you can actually set up scheduled reports. In QuickBooks Desktop, if you want to create a custom report, it's under the reports menu, click custom reports, and you can either hone in at a summary level if you're just trying to see totals, or you can get down to the nitty-gritty transactions. And once you get in there, this is an example of a summary, custom summary report. Remember I said I'll show you how to sort something by customer type, so groupings of customers. If you identified your customer list as either commercial or residential or new construction, or however you want to segregate them, could be by referral source, it could be whatever methodology you want to use, you can get a column for you could set the columns to be your customer types, and you could set your rows to be your income statement. That's just one example. That was the one I showed you earlier. You can apply filters. So on a report, you could say, I want to filter just for a particular segment of my business. So whatever your classes are, this isn't a great example, but however you want your class list to be, you could filter for just one class or multiple classes. And then on that report, you can create a special header on this header tab, and you can put a footer on the bottom. I always love this one because that's the one, when anybody sees that, they are inclined to look at it. Ooh, it's confidential. What does that say? And then you can change how negatives appear, and do you want to round numbers, things like that. So once you get the report laid out, similar to online version, You don't want to have to redo all those filters and changes every time. So make sure to memorize it. You're going to click that memorize button, and then you'll be able to get to it from your memorized report list. Give it a name, and you can even put it in a group. So this is where you get your memorized reports. You'll see them all under that option, and you can even process multiple reports. So if you've set up a group, let's say the Lisa report group, you can process all the reports at once. You don't have to run them all individually. So that's what this process multiple reports is. You choose your group. So this would say Lisa's reports. And these are all the reports that are currently sitting in the group. You can click them all or just select a couple. You can define your time range, and then you can click display or print or email, and it'll deal with them all as a group. So if I display them, it's going to stack them all across the screen so I can, click back and forth and look at them all at once. If you're in QuickBooks Online, your report options are email, print, or export to Excel or PDF. So those are basically your three options. In desktop, your output options are you can send it to a printer, you can send it to a CSV or a comma delimited file, you can create a PDF with it, and you can control the page breaks. So if you've got a report that has a ton of columns and you want it to break in certain groupings, or you want it to fit to one page wide, you can control that with these settings here. If you send a report to Excel, okay, so you click on, you've got the report open, you click on this Excel button, it's going to open this, and you can put it in a brand new workbook. Or like what I'll do for accountants, sometimes they want an Excel workbook with all the financials put together, like the profit and loss on one page, the balance sheet on another, the general ledger on another. You can keep creating a report and sending it to an existing workbook, and it'll keep creating a new page within the workbook. Under the Advanced tab, there's some options where you can control spacing. You might be doing a lot of manipulation with the numbers, and you don't want a separate column a space or column in between every column on the report. You want them to just be every column with no spaces. You can control that under the advanced options. You can control what shows on the screen versus on the output. You can, this is really handy if you want, once you're in Excel, to be able to collapse or expand and do auto filtering. If you check those boxes, it will add that functionality. All right, so now we're going to talk about scheduled reports. So scheduled reports are something maybe at the end of every week, the boss wants to see the financials, even though they might not be closed for the month. They just want to see where they are every week or every day. Maybe they want to see accounts receivable every day, okay, or accounts payable every day. You could set up a schedule and have it automatically email that out. I will tell you, this works much better in QuickBooks Online than it does on desktop, because this is web-based. So and you'll see when I show you what you have to do in desktop. It's QuickBooks Online does a really nice job of this. So there are, once you have a report group, you can edit that report group and you can set a schedule for it. So you could say, I want it to go out every day. I want it to start today and never end, or I can put an end date, and then you put in the email address of, and the subject line for the email that's going to go out, and it will include whatever reports are in that group, and it'll send it out every day or whatever frequency. In desktop, scheduled reports are available. It's just because you're operating in a desktop environment, it's a little bit more complicated. So there are special instructions or requirements to do scheduled reports when you're on QuickBooks Desktop. You need to make sure that QuickBooks is in single user mode. that you only have one company file open at a time, and that your computer is not in sleep or hibernate mode because it won't be able to run. And if you're using Outlook, Outlook has to be open. So those are a lot of conditions to have to remember every time that you want scheduled reports to go out. So I would say people don't use this very often, but it is there. And if you're disciplined at the end of every day, you make sure all of this is in place and that the reports will just go out automatically for you, it'll work. If you're in a multi-user environment and you're not the last one to leave for the day, good luck trying to get this to work. It's not the most elegant solution. So the first step, assuming all of these conditions are met, you would select the reports that you want to go out. You would set up your schedule, and then you would compose your email. This is actually a third-party app that's controlling this. It's owned by Intuit. They're the developer of it, but it's an app called Scheduled Reports, and it has to be able to interact with your QuickBooks file. So it's considered an integrated app, just like ServiceTitan or Field Edge or any one of those front-end systems would need to do. When you go into the Scheduled Report Center, if you see this pop-up, this yellow bar, that means that your Windows is running in high user account settings. And you need to, it's blocking the ability for scheduled reports to run. So if you click on that, how do I change? It'll tell you how to manage that and lower those settings so that it can go out automatically. Okay, collapse and expand. So QuickBooks Desktop has this great little tool called collapse or expand. So it's going to have the opposite of whatever you see on the screen. So if all of the little layers underneath these down arrows are fully expanded, this button up here is going to say collapse. So when you click on it, it will then collapse. If it's already collapsed and you want to expand it back, then it's going to say expand. And when you click on it, it's going to go back to the prior view. So it's kind of like an on-off switch. It's either going to say expand or collapse, which will take you to the opposite view of what you're looking at the moment. This is really helpful. If you use header accounts and sub accounts, that collapse and expand feature is really cool. I know we use it because we want to see things, I want to just see my total overhead expenses. I don't need to see every category because I just want to see the percent of my total overhead versus my gross profit percent. So that collapse can be really helpful just when looking at percentages. And then this is relatively new. You can also collapse and expand your columns. So somebody asked about classes and subclasses. If you were using subclasses and you just wanted to see the columns with the parent classes, you could use that collapse columns to control that quickly for you and just see the roll up to the parent class. Or job, same thing with jobs. So if you're looking at a profit and loss by job and you have 5 jobs under the same customer, but you just want to look at the profitability just for the customer as a total, you would collapse and it would automatically push those columns together. Okay, I'm going to take a speaking break here, see if there's any questions. Jennifer, did any come in?
I don't have any questions in the chat, but again, if you have any questions about what Lisa's going over, like she said, if it's even from the section before, go ahead and type that in the chat. And we will obviously address it for you, but Lisa, you're doing great.
Okay, hey, like I said, I got a lot to cover and want everybody to get some time back in their day. So the next topic we're going to go over is break-even analysis. So break-even focuses on the income statement. So we don't really care about the balance sheet for this set of reporting and analysis. It's going to look at your revenue and expenses over a given period of time. So break-even is when you have zero operating profit. So your income exactly matches your overall expenses, and there's zero profit. And that's a really important number to know. And we're going to talk about why in just a minute. So in this graphical view, it would be where there's no yellow in the picture. It's not a loss, it's not a profit, there's nothing. It's just both these are exactly equal. So in order to do break-even analysis, there's something missing from this income statement. You can't really do it easily without fixing this income statement. So what's missing is this gross profit area. And the only way you're going to get a gross profit is to set up a cost of goods sold section. So cost of goods sold, there's still expenses to your company. It's still money going out. Okay, it's still reducing your profit, but there's special expenses that are very different than the rest of your expenses. So it's really important, if you do not see a cost of goods sold section on your financial when you run a P&L, you are missing out on some really great information, and it will be very difficult for you to do break-even analysis. You also want to make sure, it's really important, that if you have something that happened that was extraordinary this year or last year, that you don't commingle that in with your income or expenses. So a really good example for a lot of people on this call would be like the PPP loan forgiveness. If you got a PPP loan and it was forgiven last year or this year, and you're trying to do analysis, you don't want the PPP income that got written off because it got forgiven to show in your normal operating environment. It needs to go down here as other income. Okay. Or if you sell a piece of equipment or a truck, that's not part of your normal operating income or expenses. It needs to go below the line. It needs to go below ordinary income. So make sure those two sections are laid out properly in your chart of accounts. Okay, so the other thing that's going to be really important in break-even analysis is using this percent of income option. We are going to rely on these gross profit percentages and total ordinary income percentages to tell us what we need to know. So what is break-even? It's the point, again, I said it, where your overhead costs, where everything is covered and you don't show a profit or a loss. It's expressed as the total amount of sales. So when someone says, what is your break even? The answer is going to be, it's $1 million of sales or 250,000 of sales. It's always expressed as an amount of total sales. And why is this so important? It's important because it tells you how much do I have to sell to cover everything. And part of covering everything, you as an owner, is your salary. So you obviously are in business because you want to get paid. So if you say this year, I want to take $300,000 in salary, that's fine. We can put that in to our expectation, but we need to know how much, if you want to take that much money out of the business, how much are you going to have to sell to be able to do that? And not knowing your break even could mean you end up with negative cash flow. So if you decide to take $300,000 in salary this year, but you don't have the sales to support it, you're going to be pulling from loans to cover it. And that's probably not how you want to operate. I am going to grab a glass of water. Hold on. I meant to put one at my desk before I started and I forgot. I am human. I do have to take a break every once in a while. Okay, so the next thing is, once you figure out the sales that are required to support that $300,000 salary, you have to ask yourself, is that realistic? Can I actually do that? Can I achieve that? Is my marketing and my historical performance going to support that? Are there things I can do to change my marketing and my pricing strategies that will help me achieve that number? All right, so how do I calculate it? It's actually super, super easy. If you set up your chart of accounts right, okay, and you add that percent of income and your profit and loss is accurate, the first thing you need to do is just make sure you've got a really good cost of goods sold section. Cost of goods sold are your direct costs. So they vary as you do more in sales. Those direct costs are directly related to the volume of sales. So think about materials, job materials. If you have no jobs going on, your job materials expense is zero because you don't have to buy anything. You don't have anything going on. If you have a ton of jobs going on, you're going to buy a ton of materials. So those are the types of costs, your direct labor, the people that are out in the field doing the work, that has to be part of your direct costs. So anything that's going to vary, the more laborers you have because the business is busy, that's directly related to sales. If your business declines, the first thing you're going to do is probably let go of some of your techs. So that direct labor is going to go down. Overhead is often referred to as fixed costs. You're going to have those expenses whether you do $1,000 of business or $1 million of business. You have your rent, you have your utilities, you got to pay your accountant or your bookkeeper to keep track of things. Your owner compensation is in there. Now you have flexibility to make that bigger or smaller, but if you have kind of a general idea of what you want to take as an owner for salary, you'd put that in there. So there are things that tend to be consistent from month to month. They're not varying all over the place. Your office supplies, things like that. So again, back to utilizing the tools in QuickBooks, make sure you have a cost of goods sold section. Back to the chart of accounts that we talked about earlier, it looks like this. If you don't see the words cost of goods sold in your account type, in both, and this is both desktop and online, you're missing out, okay? So here's the math. We run a financial statement from January to December, an income statement, a profit and loss, okay? It's got our income, cost of goods sold, all of our overhead. Anything, we don't have anything below the line in extraordinary, okay? So we add the percent of income. So step one is run your historical profit and loss, add the percent of income column, then gather the gross profit percent and the total overhead expenses. So this 30.5%, that's my gross margin, and my total overhead. So, you know, my financing, my general administrative costs, my insurance, my marketing, my overhead payroll, my professional fees, all my fixed expenses add up to a certain number. I take just those two results, the 30.5% and the 242,000. And from those two numbers, I can tell you what the break even is. So working with the numbers, I've got 242,664.63 as my total overhead expense. I divide that by the 30.5%, so 0.305, I convert it to a decimal. That tells me if I do things exactly like I'm doing right now, next year, my break even is 795,000 in sales. Okay. So right now, if I keep doing what I'm doing, if next year I expect my income to be 587,000 and I expect all my overhead to be what it is today, I'm going to be at a loss. I am not going to make it. So see how that number is really important. So if I establish this, okay, and me as an owner, my wages are in this payroll expense number, and this is what I now know, for me to take those wages, I got to just break even and not have to dip into savings, I got to produce 795,000 of sales. So I calculated it. Now what? Again, you have to ask yourself, can I achieve that sales volume next year? How am I going to go from 587 to 795? That's a big jump. Can I do that? Do I have the people? Do I have the resources? Do I have the marketing in place to achieve that? Are any of my fixed costs going to change? Is my rent going to go up? Am I trying to take a bigger salary? Am I hiring more people that are part of overhead? Do I need to adjust my salary? And if I adjust my salary down a little bit and this number comes down, how does that affect what my break even is? So it's really, really useful to understand the break even. What if I expect my numbers to change? How will that affect things? Or how do I put that together? So you'd start with a pro forma financial in Excel. So you could take your current year numbers, export them to Excel, change the things in Excel that you know are going to change or that you want to change, play around with your salary, play around, oh, if I hired another person, how would my wages change? Play around with the numbers, get it where you think it's going to look. That's called a pro forma. Add the percent of income column in Excel, and then do the math. And you'll be able to say, okay, if I see this happening next year, what's my break even? And again, ask yourself those same questions. Okay, I'm going to take another quick break. Does anybody have questions about break even?
We do have a question, Lisa. The question is, how often would you advise you do a break even analysis?
I do it once a year, at least, and base it on the prior year. Start with your prior year numbers and just, think through it. Do you think you'll do pretty much what you did this year, right? Is your overhead changing a lot this year to last year? So you might have to do a little bit of adjustments, but usually starting with last year's numbers is a good place to start.
Great. And that was the only question right now.
Okay. All right. So now we're going to get into job costing and estimating. So we're going to talk about what is job costing? Why is it important? How do you do it in desktop versus online? And throughout that, we're going to talk about how you match the timing of revenue to the timing of expenses when you're getting deposits up front on jobs, and how is the reporting different in the two pieces of software. So to start out with job costing and the definition, it's really determining the labor and material that's going to be required to complete a job. And so notice I said the cost, not the revenue, not what are you going to bill for the labor and materials, but what are my costs? What do I think it's going to cost me? So if you're in construction or contracting and you build houses, and you're a general contractor, you're going to likely get bids from your outside suppliers for the plumbing or the electrical or the drywall. And you're going to put that together. That's your cost. And then you're going to mark it up, and that's going to be your revenue. So you need to know both sides. What are your anticipated costs and what do I want my markup to be? If you're in the line of business where you're doing installs, HVAC installs, what are the material costs and how much labor do I think it's going to take to put it in, and what kind of markup do I want? That's what you're forecasting your cost and your revenue. So why is it so important? It's your budget. So if you don't do job costing, you can't really predict cash flow. You can't predict when do I need to ask for more money. If it's a big long-term project, it's your opportunity to measure what did I predict happen versus what actually happened. Helps me do things better the next time. If I lost my butt on one job, I can make it up on the next. If I just have that information to know where I went wrong, I can correct myself and do it better next time. So you'll hear people talk about above the line and below the line. So what do they mean by that? Above the line is everything gross profit and above. Below the line is your overhead. When you're thinking of job costing, The things above the line are the things that you're assigning to a job. Your revenues, job by job, and your costs are job by job. Your materials, your labor, all of those things that move up or down in the course of a job. Below the line doesn't have a job attached to it. You can't assign a job to a bank service charge. You can't assign a job to your bookkeeper. You can't assign it to your insurance or your professional fees. So those are the things that do not get job costed. So what tools do I have in QuickBooks to help me with job costing and estimating? Well, they're different in QBO versus desktop. So let's start with the QBO versions. We talked a little bit. There is one that I didn't mention on the previous screen. There is one called Simple Start. You guys wouldn't even be able to touch that with a 10-foot pole. You're way too big for that. It has you can't even manage your bills or anything like that. So that one's off the table for you. You would start with Essentials Plus, or you could go to Advanced that has that additional reporting. The desktop versions, again, we talked about them, Pro, Premier, and Enterprise, and both the Enterprise and Premier have contractor or industry specific editions. And for most folks on this phone, you would be installing it as Contractor Edition. What does Contractor Edition have? This is just a quick screenshot that's very helpful in the construction space or any contractor that is using outside subs. You'll want to know when their general liability expires, their certificates, and when does their work comp expire. Because if they're expired and you go through a work comp audit, you're going to end up paying their work comp on your subcontractors, and you don't want to do that. And then under contractor reports, there's a lot of them that are unique to the construction version or the contractor edition, but the two I have highlighted are one of my favorites, the unpaid bills by job report. So if you're looking at what you owe out to vendors and you want to just pay ones or analyze ones that are specific to a particular job, that's really helpful. And then the expenses not assigned to jobs. So if you enter something in QuickBooks and you forget to tag it to a job, you can actually get a report that helps you narrow down what you might have forgotten to assign to a job. Okay, so job costing QuickBooks, we're going to go a little bit deep dive between the two editions. So in desktop, everything starts with the job itself. So when you go into your customer list, the indented ones are the jobs. So you might have a customer that you do 2 or 3 different jobs for. And if you want to track things, not just at the customer level, but at the job level, you have to add a job. So you highlight the main customer name, like in this example, Albert Cruz, you would click on that. And then up at the top where it says new customer and job, you click on that down arrow and you say add a job. So you have to highlight the name of the name that you want to add a job to, and then click the button to do a new one, or right click. At the end of the day, it needs to look like this, where the jobs are indented under the main customer name. In QBO, they're called projects. So if you don't see projects activated, you just need to turn it on under the gear icon in the top right-hand corner of QuickBooks Online. Once it's activated, you'll see this option for projects. And literally every job that you get, you would add a project into the system. So you give it a name and you attach it to a customer. So in this example, the back porch edition is a project related to this customer. You got to start there. Those are the starting points. Then the next step is an estimate. So there's a big difference between QBO and desktop on the estimating side. This is a big shortcoming for QBO. Notice on the estimate, there's just a quantity, rate, and amount. It's all focused on what you're going to sell it for. There's no way to put in an estimated cost. So you don't really have an opportunity to put in your budget. What do I think it's going to cost me? I get that I want to charge the customer a certain amount, but what do I think my costs are going to be? So that's, in my opinion, that's a big shortcoming. Now, what people do to overcome it in QBO is, instead of using the estimate versus actual analysis, they use the budgeting feature in QuickBooks Online. So you can create a budget for a customer and then run actual versus budget and view it just at the customer level. So it's kind of clunky and it's just one report. So it's, in my opinion, if this is important to you, estimate versus actual, you should not be on QuickBooks Online. In desktop, this is the, in desktop, this is the column, this estimate column. This is my estimated cost. So this is where you put in your budget of what it's going to cost you for each of your items that you ultimately are going to bill them. It could be phases of construction. It could be individual products and services. So whatever is going to ultimately get invoiced to the customer, you want to put in your estimated costs. And then most people don't mark up line by line. They don't say, okay, this product's going to cost, or service is going to cost me 8,000. I'm going to mark that up by 1,500. And then this is costing me 6,000. I'm going to mark that up 500. Usually they'll put their total costs in, and then they'll add a single line item called markup, and they'll put the total markup over here. So what, this is your estimated revenue, and this is your estimated cost. So items, when we were back on this screen, both in desktop and online, items are the details of what makes up that job budget. So they could be, again, phases of construction. They could be the individual products and services. And that list are called items. And they need to be set up as double-sided items. So when you open an item up, whether it's in desktop or online, this is just a screenshot from desktop, there's a little checkbox in both systems that allow you to check the box. And when you do, it opens up this whole purchase side. So if I'm going to be using this item both to sell and to pay for things, because I want to see it on my estimate versus actual reporting, I need to click that box. It doesn't do this by default, so you physically have to do it inside your item list to every item. Check that box, define the cost side. So anytime I buy it, where is it going to go in the general ledger? Every time I sell it, this is where it's going to go when I sell it. So if I put it on an invoice to a customer, QuickBooks knows to use this mapping. If I put it on a bill or a check, it knows to use this mapping. So it's very specific based on what transaction type you use this item. It knows where to go in the general ledger. So this is just an example of doing a purchase. I'm buying this item. So it knows to look to that cost side on the previous screen, and I'm attaching it to this job. So that's where you start with job costing. Now we're going to talk about job costing labor. That was like an example of buying materials or subcontractors, paying for subcontractors. But if you're trying to job cost labor, it gets a little bit more complicated. Everything with job costing around labor starts with a timesheet. If you're not using clock in, clock out with the front end systems, you should be. Make use of it. They usually always include it. And I know, like, just using Field Edge as an example, you can clock in and clock out, and it will push the time into QuickBooks. And once it's in QuickBooks, now you can do something with it. So it's really valuable information if your techs are clocking in and clocking out. If you're not using a front end and you want to use QuickBooks Time, it used to be called T-Sheets, but Intuit bought it, and now it's called QuickBooks Time, but it's the same product. You can have techs using their phone, clock in and clock out, and it tracks them on the GPS, shows exactly where they are, shows you who's on the clock, and where they are out in the field. So if you see them sitting on the beach, you know they're not working, that's a problem. And it's really the building block to the job costing for labor. The QuickBooks Time product is available for both desktop and online versions of the software. All right, so the next step is I have all this time, that's great, but now I have to do something with it. Time is just time, it's just hours on jobs, there's no dollars. To turn the hours into dollars for analysis, you need to use a payroll service. So if you're on QuickBooks Online, you have 3 different options: Core, Premium, and Elite. And again, I'm going to share this with you. It's got the different options available for each of the services. In QuickBooks Online, all 3 versions, Intuit will pay the taxes and file the returns on your behalf. You used to be able to do a do-it-yourself option, but that is not available anymore. If you're going to use one of the QBO payroll options, Intuit is going to automatically file and pay your taxes. So if you're using timesheets, then you pull, or so using QuickBooks Time, you pull that time in and you use one of these payroll service options, then you will be able to see labor costs on your projects. If you're on desktop, you have 2 options for an integrated payroll service. You have an enhanced payroll and you have assisted payroll. Enhanced payroll is where you pay all the taxes and file all the returns on your own. Assisted payroll is you do all the payroll, like you create all the paychecks and set up all the employees, but when you create the paychecks and hit done, it's going to automatically send that information into it. They're going to file and pay the taxes and withhold the money from your account and post an entry right back into your system. So assisted payroll is really awesome if you have maybe a bookkeeper that's not, you don't want them to be responsible for those tasks. This is a great way to keep a handle on that, but not lose control of the job costing. This is a screenshot of projects inside of QuickBooks Online. Remember I said it starts with projects, same thing as jobs in QuickBooks Desktop, they're called projects in QuickBooks Online. So you've set up a project for each job and your labor costs can be viewed. This is one cool thing that you have in QuickBooks Online that you do have it with Enterprise, but you don't have it with any of the other versions. You can kind of see what the time cost is, even though you haven't run payroll yet. So if you had not used, if you decided not to use QuickBooks payroll option in QuickBooks Online, when you're inside of a project, you would still be able to see your forecasted costs associated with that hourly time. It does take a little bit of extra work to do that. And I'll show you in a future slide, but it is cool. If you're not going to use an outside payroll service, you can still see what the time is costing you, but you can only see it when you open up that little project. You can't see it on any reports. So in desktop, you want to activate the time tracking feature, turn it on in preferences. And then this is what a timesheet looks like. Looks a little different in QuickBooks Online, but they're essentially the same. You're tracking where the employee is, what service are they providing, and how are they getting paid, and where did they go from day to day. In desktop, you need to make sure this little checkbox is checked to enable job costing for the payroll. And then any additional benefits. So this is going to be unique to desktop. You can't really do this in QuickBooks Online. If you want to do a burden rate, or you have extra benefits that you want to get job costed right along with the payroll that's going out, you can set up additional payroll items and track them by job. That's only available in desktop. So this is just a screenshot of what a paycheck looks like, where it's taking all the labor and pushing it around to all the jobs and service items and accruing all these different numbers. It's a very complicated entry, but QuickBooks does a great job of automating that process. It just starts with the timesheet. If you can get the timesheet in, this part's super easy. If anybody on this call has to do certified payroll, this is an enterprise only option. I actually worked with Intuit to help build this module. It is, if you are in an industry that you have to pay prevailing wages to municipalities, the certified payroll report can be created for any job that you're paying on. So how do I get job costing if I'm using an outside payroll service? Let's say you're using ADP or one of the other recommended payroll services that Service Nation might encourage you to use. We have the answer if you're on desktop. There's a process that we use. I made this term up. It's not official. You won't find it in any help article probably, but it's called mock payroll. It's free. You can turn on the payroll functionality in QuickBooks, but not pay for it. It's called manual payroll. So there's no taxes, there's no 941 returns or W-2s because you have an outside payroll service that's handling that for you. But it is a way to populate your job cost reports quickly and easily from a timesheet. So it's called mock payroll. So if that's something you're interested in learning how to do, make sure you reach out to Jennifer or myself or whatever. We can show you how to set that up. If you have the timesheets, it's super, super easy to do and it's free, which is really cool. Okay, now we're gonna get into the reporting and how it's different between the two. How am I doing on time, Jennifer?
You're doing great. It's not even 2 o'clock here, so.
Okay, all right. So QuickBooks Online has I said earlier on, it's got very limited reporting at the job cost level. So if that's important to you, if job costing is important, again, this is probably not the right software for you. This is just a view inside of a particular project. You can deep dive and look at the time costs by employee, look at your overhead expenses and your revenue and see your profit and profit margin. But it's one job at a time and it's not a report. You're looking at a screen. If you are in QuickBooks Online, to get that time costs area to be visible, this is kind of cool. So you've got time on a timesheet in QBO and you want to be able to see dollars, even though you don't process payroll in QuickBooks. You can put in an hourly rate for an employee. It'll automatically add the employer taxes. You can put other additional costs that you want to roll in or factor into that hourly rate. And then that's what will populate. It'll take the hours on the timesheet for that job for that person multiplied by that rate. And that's what's going to be visible when you click on this time cost by employee or vendor. Okay, so this is the one and only job cost report you have available to you in QuickBooks Online, but it will not include labor in internal payroll. There's no way to get it on here unless you're using one of the QuickBooks payroll modules. Okay, so you'll never see your internal labor on this report, a profit and loss by job, unless you have unless you're using one of those services. If you're using desktop and you use the mock payroll option that I was talking about, we can see our labor allocated to the jobs, even though we're using an outside payroll service. So this is really awesome. All right, I'm going to run through a bunch of different job cost reports available in desktop. So these are just, a listing of a particular job, the different items that were involved. This is my actual cost. This is my actual revenue. So this is not comparing against an estimate. It's just looking at what was my revenue, what was my cost, what's the difference. Now, if you are using estimates, You can see your budget versus your actual. This is what was on my estimated cost. This is where I'm at right now. This is the difference. Again, here's my estimated total revenue. You see the markup at the end. And then here's my actual revenue. I haven't done any billing for it yet. So this report's really helpful to see one job at a time and deep dive. When you're an enterprise, you have this committed costs and unpaid wages. This is very cool. So if you have a bunch of purchase orders out on a job, you had to buy a bunch of equipment or materials, but you haven't received them yet, but they're out there on a purchase order. If you use purchase orders in QuickBooks, it'll factor those costs into the committed costs column. Or if you have a bunch of time on timesheets and you haven't yet converted it to payroll, it will give you the math if you were to convert it to payroll, what it would look like. So it kind of helps you predict the future, the very near future before it's happened, which is great. Then with contractor and enterprise, you can get this cost to complete and expected actual cost based on how far, what percentage complete you are in the project. Okay, next is job deposits. If you get money up front from your customers, you need to be able to make sure you're not skewing your revenue that's showing on your income statement. If you do it incorrectly, you will. So if you manage your world by bank fees, right? And people are giving you deposits on jobs and you're booking all that to revenue, everything you see hit the bank is revenue, 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 but you haven't started the work. It's just money up front. Do you think if you ran a profit and loss that that's going to give you an accurate statement of where you are? No, it's going to look like you're doing great in the months where you got advances, and it's going to look like you're doing horrible in the months where you didn't. So if you need to account for job deposits properly, you have a little bit of setup to do. So they're actually a liability to you. When you get money up front from a customer before you've started the work, so if you're doing a huge install project and you get $20,000 up front to go buy the equipment, you can't post that to revenue. It needs to go into a liability account, something that's on the balance sheet, because that is, you owe that back to the customer. You either have to go buy that stuff and install it, or you got to give them their money back. So it's not revenue to you till you've earned it, and you'll be overstating sales. So you want to record the money you get up front in a liability account. To do that, if you're going to be invoicing for that money up front on a customer invoice, you need to set up an item to use. So it would be just a item in your item list. I usually make it an other charge, and I direct it to this liability account. That's how you set it up. Then you create your invoice to the customer and you say, I need a deposit, I need a retainer, I need some money up front from you to get started on this project. And you send that out, and then they send you the money, and then you get started on the project. This, setting it up, the item the way I just showed you, and putting it on an invoice like this, it will automatically end up on the balance sheet exactly where you want it. It's not going to show as revenue yet. So you can do that process in both desktop and online. But now you need to keep track of all the money that people gave you up front and where you are in using up that money and recognizing revenue. Sorry, I got to take another sip. Okay, so in online, the report is not so good. It will show you in your customer deposit liability account all the ins and outs and where you are customer by customer, but they never fall off this report. So if you've been doing this for many years, you're going to have to look through old jobs from years and years and years ago. And so the information's there, but it's not pretty to look at and sort through. In desktop, I can create a report that will subtotal and give you the net amount of what's left open, and they automatically fall off the report when they've used up their deposit in full. So this one is kind of self-maintaining. The other one is just a lot to look through. Okay, revenue recognition. So how, if I'm throwing all this money in customer deposits and it's on my balance sheet, how do I ever get it to income? So we want to match the timing of your revenue to your expenses. So when you run a profit and loss, you know that what you're looking at is real. It's real profit. It's not just a bunch of revenue with no expenses attached. So everything in QuickBooks is dependent on the transaction date. It's based on the date of the bill. It's the date of the invoice. Everything is date driven, not due date, not payment date. It's date of when it's been incurred. So if you have to do percentage of completion recognition of revenue, this is complicated. I know the screen looks scary, but with Enterprise, it will do a really good job of giving you how much you've actually earned. So in this example, it's called the work in process summary report. It's a built-in report to Enterprise. It's got all your jobs. What did you estimate the cost to be? What's your actual cost? What percent have I gotten to? How far along in the path of this job have I gotten in terms of incurring my expenses? In this example, I'm 95% done with this job. It doesn't mean how far done am I in swinging the hammer. It means how much have I incurred against the total budget? Okay, so it's not dependent on a subjective answer from a field supervisor that says, I'm 80% done of this job. I don't care how far you're physically done with the job. I need to know how far financially you're done with the job. So assuming you're on budget, I'm 95% done with this job. That means if I'm matching my revenue to my expenses, I should be recognizing 95% of my total anticipated revenue. I got to take this percentage and apply it to the anticipated revenue. So I may have booked 163,000 in revenue, or it's sitting in deposits, but what I've really earned and what should show on my profit and loss is the 156. That's 95% of this total estimated revenue. So this is when you hear people talk about over under billings and percentage of completion recognition of revenue. This is what they're trying to do, is analyze, because they're getting deposits up front and it's not really revenue yet. And they're trying to convert the books back to matching timing of revenue to expenses. This is the report they use to do that. So now I want to recognize the revenue. How do I do that? Well, I'm maybe halfway through the job and I'm 20% done with the job. So I'm going to invoice 20%, but I've already received some money up front. So I can't send them an invoice, but I need to pick up the revenue. So I'm invoicing. This is just an internal document. No one sees it but you. You recognize the percentage of revenue that you've earned and you subtract that same exact amount against your deposit that you received in advance. And the result is you can see where you are in the project. So in this example, I have overspent versus what I got up front as advances. So I better go get more money from the customer because I'm upside down on this project from a cash flow standpoint. So this methodology is really helpful because it hits you in the forehead that you need to get more money up front. Okay, so when is QBO a good fit for job costing? QBO, because I've been kind of ragging on it for the last job costing explanation, it does an okay job if you're in the dispatch world, where it's kind of a break fix environment. You're doing small in and out jobs and they're completed in a few hours and you don't really need a lot of job costing. QuickBooks Online will work. If you're a big company though, QuickBooks Online is going to start to choke. It's going to take long to run reports. It's going to, so even if it can do it, It might not do it well after a certain period of time. You won't be able to run these bigger reports. It's just gonna, because it's web-based, it's gonna get clunky. If you have a really good front end system that will give you all the reporting you need on job costing, then QuickBooks Online can work for you. Okay, I'm going to do another poll question and then we'll take a break for Q&A. So how do you learn best? Is it by doing what we're doing right now, webinars? Are you a reader? Do you like one-on-one training, or is it more trial and error? So if you would just type in your answers in the chat, that would be awesome.
Seeing a lot of A's, Lisa, and a B and a C, but mostly A's.
Okay.
C, which is probably why they're here today, right?
Yeah. So there's nothing wrong with trial and error. If you're on QuickBooks Desktop, you can open up a sample file, which gets installed when you install the software, and you can play around in that sample file. It's not going to hurt your real data. But I would recommend, if you really are unsure on how to do something, don't rely on letter D. The financials are too important. You don't want to learn things the hard way. There's lots of resources available to you to get answers. Okay, any questions? Let's give a minute for people to throw those out. We're almost done. This is our very last topic.
No questions yet, Lisa.
Okay, this is a quiet group. Okay, somebody said they've got some questions, but they want to wait till the end. So, all right, I'm going to keep going. Troubleshooting. So, in QuickBooks Online, if you're trying to see like who did what, or you're trying to look back because you know something got screwed up and you're trying to see what caused it or who did what, there's an audit log report. You can get to it in one of two ways. You can get to it with the little gear icon, top right-hand corner, and then you would choose audit log. Or when you're in reports, there is an audit log report. So either way will take you to the same place. I will tell you the audit log in QBO is better, I think, than desktop, because it literally tells you this person logged in, this person logged out, they did this, they did that. It kind of logs everything they're doing throughout the software. In desktop, they're kind of hidden. All of those kind of log reports are under accountant and taxes in the reports menu. There's an audit trail. And then if you've closed the books, but somehow the numbers still changed, this exception report is really helpful to tell you what changed. So if you had everything locked down, retained earnings matched from the prior year, and then you run it and all of a sudden it doesn't, if you had a date in there, that exception report will tell you what got changed. And then the voided, deleted reports are really helpful too. So this is just a sample of a voided, deleted summary report. It'll show you, the same transaction number 50006 got changed a bunch of different times, tells you the date and time it got changed, and then it ultimately got deleted. And it tells you what user did that. If your agings, when you run an accounts payable or accounts receivable aging doesn't appear correct, like things are appearing in the current column and they should be in the 1 to 30 column, or vice versa, it's a setting that you might want to change under reports and graphs. You probably want to age from the due date, not the transaction date. If everything was due on receipt, then yeah, you could age from the transaction date. But if you're giving your customers 15 days or net 10 or whatever, the aging really begins from the due date, not from the day the transaction transpired. You can quick zoom on just about anything. you want. So like in this example, I want to look at all the transactions that are 1 to 30 days. I can double click on the total and it'll bring up a list of the individual transactions. So I'm sure everybody's very familiar with QuickZoom. Same thing works in QuickBooks Online. This is probably one of my favorite little things to do in desktop. If I'm looking at a transaction that I know is linked to other transactions, and let's say I'm looking at a payment from a customer and I know it's part of a deposit and I'm trying to fix things because something was done wrong and I want to quickly get to the related deposit that the money's in. If you hit that transaction history button on the reports tab, or your shortcut is this Control H, it'll bring up everything that this transaction is related to. So in this example, this payment is related to both an invoice and a deposit transaction. It's linked to both those. So you can go back and forth by hitting Control H and then selecting where you want to go. In QBO, there's a transaction journal and an audit history. So if you pull up a transaction, click on the More button, you can get to the transaction journal or the history. And the journal is really helpful because it's going to show you the debits and credits behind any transaction. So if you had a really complicated invoice with all these line items and inventory that you sold, there might be a lot of debits and credits flying around behind the scenes that you're trying to maybe reverse or, make it financial adjustments. If you display it as a journal entry, it will show you all the accounts that are affected by this one transaction. And this is true in both desktop and online. So in desktop, this is how you get to it. The transaction journal, or your shortcut is Control Y. It'll again bring it up with the debits and credits and the associated accounts. And then my favorite thing to do is to customize that report and add these two columns: who entered it and when was it last changed. So when I find a mistake and I keep seeing the same kind of mistake over and over, I'll run this report and add these two columns so I can see what user is causing this problem. Who do we need to retrain so they don't keep making this mistake over and over again? So these two options are really cool when you're trying to get to the whodunit, but it's only going to show the last person. So if 5 different people touched it, you're only going to see the last one that did it and what time and date they did it. And then QBO and desktop both have search and find type features. At the top of your screen, you can type in something and then it'll pop up with this search screen, and you can then begin to search on different aspects to narrow in on something that you're looking for. In desktop, I use this feature constantly under the edit menu, find, and then I go to the advanced tab. You can search on an amount, a date, all kinds of stuff, an account, a vendor, a customer, and then you can turn it into a report. Whatever's displayed here, you can click report, or you can just highlight one and go to it and find it. There's also a search, oops, sorry. My mouse is very touchy today. Sorry about that. So under the edit menu, there's also a search option, which allows you to search on content. I don't use this very often. I have to admit, I usually use the find, but this is another way. If you're searching for something beyond what you can do in the find, you might find it here. But to use this, QuickBooks has to constantly be indexing your system, and sometimes it can slow things down. Okay, one more poll. How do you buy your software? Do you buy it by going to Intuit's website? Do you call Intuit? Do you use a third-party reseller like us? Or you have no idea it was there when you got there to the job? If you could just type those answers in there real quick into the chat. I see a lot of, I don't know, it was here when I got here.
Yep, I see that same thing, Lisa.
Okay. So what are some of the benefits of working with out of the box? We will give you unbiased recommendations on the software. If you call Intuit, they're going to tell you to buy QuickBooks Online, whether it's the right fit for you or not. If you come to us, we're going to ask you a lot about your business, understand what your needs are from a functionality and reporting standpoint, and we're going to make a recommendation that makes sense for you. Okay, we can get you discounts on any version of QuickBooks. And we're not incentivized by trying to sell you an online subscription, like might be the case if you call Intuit. In addition, you're talking to somebody on the phone that is a software salesperson, and they don't have the expertise in your industry to give you specific advice on the right kind of software. So we do understand your space. We do a lot in the contractor space, heating, electrical, plumbing. So we really understand what your challenges are. And we're QuickBooks experts. We're trained to help you with what you need to know. And if you buy services from us, you also we are a Roundtable Rewards member. You will get money back on working with us. Again, I'm the founder. This is my email. You are welcome to email me. Donna, who is on vacation today and was not part of the session, is the relationship manager for Service World, Service Nation, Service Alliance, Service Roundtable, that group. So you can feel free to reach out to her as well if you want more information on what we do and how we can help you. So somebody said they had some questions for the end. This is the end. So if you want to throw them in chat, or Jennifer, if you want to take everybody off mute, you're welcome to do that too.
Absolutely. Yep. I will unmute everyone. So if you want to just speak out your question.
Yeah. If we get feedback from somebody, we'll have to mute you, but we'll give it a shot. You never know what we're going to get.
Hi, Lisa.
Hi.
Hello,
And who is this?
Hi. My name's Andrea.
Hi, Andrea.
Hi. So I have a few questions. So I just started with this company and I kind of have an idea, but I'm wondering what you recommend on when it comes to like the QuickBooks that he has set up. It is online version, and I'm pretty sure we're going to have to change that to desktop, which I'm going to ask him today. But when I do change to desktop, is everything going to transfer with it, or should I wait a little while before entering more stuff until we change to desktop?
Okay, so I will tell you, cleaning up is easier to do in desktop than it is online. Like, it's faster. So if you feel like it's a little bit of a mess, you may want to do the conversion first and then do cleanup once it's in desktop. We can help you with migration from any version of QuickBooks. So if you're going from desktop to online, or online to desktop, or Great Plains to QuickBooks, or NetSuite to QuickBooks, or whatever to QuickBooks, we can help you. We have a data services team that will do the migration for you, with you, assist you with that process. But there are a few gotchas. Like if you're using payroll is not going to transfer. The debits and credits will transfer. So your financials will stay the way they are, but the individual paychecks aren't going to look like paychecks. The debits and credits will be there, but they're not going to be paychecks. So there's a lot of little nuances that go on with converting from one software to another. So I would strongly recommend that you reach out to us after this session. Jennifer, did you get her name? I forgot already.
Andrea
Yeah.
Thomas.
Okay. All right. Sorry,
Okay.
I'm like miss short-term memory. When I meet somebody and 2 seconds later, I forgot their name. So I never make it in sales, right? Ugh, I can't ever remember somebody's name. So you definitely want to work with a professional. We can give you templates. If you wanted to start a brand new file, okay, let's say we took a look at it and said, you know what, this is just beyond worth the effort of cleaning up, and you just want to start a brand new file. If you're a Service Nation Alliance member, are you one of those?
We are, yes.
Okay, so we have a template, a QuickBooks desktop template built for you, that if you said, I want to start a brand new file, this is just garbage, I want to start clean, we can give you the template. It's already set up with the chart of accounts, the item list, like all ready to go. And the classes are turned on, they're set up for your industry. And then we can migrate your balances. So you just run summary, balance sheet, P&L, we would put those in, open payables, open receivables, that kind of thing, and help you kind of piece it together to move forward. But you got to do the timing right. If you're using payroll, you'd want to do it at the end of a quarter, things like that. So that's what our data services team would work with you on to help you figure out the best way to make that migration. And we'll get you the new software at a discount. So, okay. Did that help? It was probably a longer answer than you wanted, but. Anybody else? Andrea, you are having a little bit of problem with the audio, unless it's just my end.
Yeah, I'm not able to hear you very well either. I'm sorry.
Andrea, why don't you use the chat? It could be your internet connection is getting a little goofy. And then while she's doing that, if there's anybody else that wants.
I think she dropped off.
Okay.
And I know I mentioned this at the beginning, and several of the audience members today asked in the chat, but we will share out this presentation. So if there's any areas that you wanted to revisit or you just kind of wanted to look at again, we will have that for you. Hopefully today, if not first thing tomorrow morning. And then if there's something that sticks out and you needed to dive deeper with us, we're here for you to continue that conversation.
Okay, well, if we don't have any further questions, I'm gonna just say thank you very much, everybody, for attending, and love working with this group. Service Roundtable is an amazing group, and we're here to help.
Absolutely. Thank you, Lisa. Thank you, everyone who joined us today. We appreciate your time and hope you enjoyed the presentation.
Thank you.
Thank you. Very informative.
Thanks a lot.